All right, let's jump right in. Today, we're looking at a huge shift that's happening in one of the world's most fascinating real estate markets, Tokyo. Something really fundamental is changing there, and it's creating this massive split that's affecting literally everyone, from big-time investors all the way to local families just trying to find a home.
And it really all starts with this one number, 100 million yen. You know, just a few years ago, that was the kind of price tag you'd see on a super luxe penthouse. Now, it's getting shockingly close to being the average price for a brand new condo in the Tokyo metro area.
So just think about that for a second. What happens when a price that used to be for the ultra-rich becomes the new standard for a regular family home? Well, that's the big question we're digging into, and the answer shows us a market that's literally breaking apart right in front of us.
Okay, so let's start with that absolutely staggering number, the 100 million yen condo. How in the world did we get here? Well, it's a story about a market that got way hotter, way faster than anyone really expected. So in early 2026, the market just shot into what experts are calling a completely unprecedented price range. And this isn't some temporary blip either. It's a real structural change, and it's being driven by the soaring costs of land and construction, plus the super intense demand for only the best locations. Now, what's really fascinating here is just how wild the swings are. I mean, look at these numbers from just the first quarter of 2026. In January, the average is sitting around 83 million yen. Then bam, February jumps to over 110 million. It calms down a little in March, but stays solidly in that 100 million yen zone. This is the new reality. And here's the thing you've got to understand. This isn't just a handful of crazy expensive penthouses in central Tokyo messing with the average. The entire foundation of the market is moving up. The source material points out that the actual price per square meter has been climbing for 11 months straight. That just means the fundamental cost of housing is getting more expensive, period.
And this chart? Oh, it shows the two things happening perfectly. You see the bars jumping all over the place. That's the volatile average price. But look at that line layered on top. It's just a steady, relentless climb. That proves the basic cost of building is just going up and up and up. So new condo prices are going through the roof. Let's move on and talk about the ripple effects. Because a price surge this big never ever happens in a vacuum. It sends out these powerful waves that start changing everything else. Think about it. When a massive number of buyers get completely priced out of the new condo market, where do they go? They start looking at the used market, of course. And that sudden rush of demand is rewriting all the rules over there too. What we're really seeing is a tale of two markets that are totally connected. On one hand, you've got the new condos with their insane prices and super picky buyers. But on the other, in the used market, this whole new category is popping up. These nearly new condos, less than 5 years old, are suddenly being seen as a fantastic alternative. And this is where these places become what the experts are calling an alternative asset. They've got modern specs, they're in great shape, and hey, compared to a 100 million yen new build, they look like an amazing deal. And because of that, their prices are getting pushed way up, creating this whole new premium category of their own. And all of that brings us right to the heart of this explainer. The market is truly dividing in two. We're not just talking about ripple effects anymore. We are seeing a deep, fundamental split in who is buying what and why they're buying it. Now, you might think with prices this high, everything is just flying off the shelves. But that's not what's happening at all. In fact, buyers are getting incredibly strict. They're putting every property under a microscope, looking at its location, its future value, and asking if the price is really worth it. If it's not perfect, they're just walking away.
I mean, just look at the sales rates for new condos in the first month. It goes from a pretty weak 55% in January, shoots up to over 71% in February, and then drops back down to 64% in March. Swings like that are clear proof of a really nervous and selective market. Only the properties that are seen as true winners are selling fast.
The source material we're looking at really nails it with this quote. The dividing line between winners and losers is becoming clear. This isn't one of those markets where a rising tide lifts all boats. Not anymore. It's a market of extremes. This pickiness points right to that deep split we're talking about. Yeah, the new, expensive condos get all the media attention, but where are most of the actual sales happening? Where's the real volume? The answer is probably not where you'd think.
Okay, take a look at this. This chart tells an amazing story. It shows the age of the used condos that actually sold. See those nearly new ones? They're just a tiny slice of the pie. But that huge slice, the biggest one by far, over 40% of all sales, is for properties that are over 30 years old. This is where the bulk of the market actually is.
So this shows us the two totally different tracks buyers are on now. You've got what we can call the asset class buyer. They're focused on high-value places in the best locations, basically treating real estate as a pure investment. And then you have the actual demand class. These are regular people, families, just looking for a place to live. And to find something they can actually afford, they're heading straight for these much older properties.
Okay, this brings us to our final section, the new rules of real estate. With this great divide happening, what does it all mean for the future of Tokyo's market?
Well, the biggest takeaway is this. The era of easy, uniform growth is officially over. That time when you could buy pretty much any property in Tokyo and just expect it to go up in value, yeah, that's past. The market has truly, fundamentally changed.
So this new reality really comes down to three new rules. First, a property's asset value is now being judged incredibly strictly. Second, location and the age of the building are more critical than they've ever been. And finally, this split between high-value investment properties and affordable everyday homes, well, it's probably here to stay.
And that leaves us with one last really big question to think about. As Tokyo's market keeps splitting into these two parallel universes, one for investors and one for residents, which path is ultimately going to define the future of the city? The high-end asset market or the mass market demand for a place to simply call home? That, right there, is the great divide we'll all be watching.